Hi, welcome to DM and the MD Real Estate in Focus. Again, my name is Dorothy Menelas. I'm a RE/MAX agent and I'm with the Abrams Group. Today I have a special guest, Mr. Rob Mercer, and he's with First Home Mortgage, and we'll be talking about tax returns as a down payment for a home. Welcome, Rob.
Thank you so much, Dorothy, and thank you for your time, everybody.
Yes, thank you for coming. And so, Rob, I was reading this blog, Economics Outlook by Michael Hyman, and he talks about tax returns and down payments for a home. And he said that one of the barriers to home ownership is the actual down payment.
Sure.
And that a lot of people, he had some fun facts, interesting facts about the different types of source of funding people use for a down payment. And some were stocks and bonds, gifts from relatives, savings, and then tax returns.
Yeah.
And so
I think what I read is that 80% of all Americans can expect a tax refund this year, which that number surprised me that it's that high. And the average tax refund is a little over $2,800. So maybe you kind of shape this as, it was awful to have to pay the government so much in taxes, but this is them giving it back to you because you've overpaid. You get your refund and you can use it for something positive like buying a house or maybe improving a home that you already own in order to get it ready to sell. You could go on vacation, but we're going to encourage you not to do that. This is a great way to, sort of a forced savings account throughout the year. And when you get that check back, let's earmark that for buying a house and for a down payment.
that's right. That's a good idea. And so, what is the percentage that homeowners usually have to pay for a down payment? Sometimes they say the average is 5%.
Sure. It all depends on the type of loan and the qualifications of each borrower. So it's important to give a lender like myself a call and kind of work through it. But for a veteran, you can get in for no money down. You'd still possibly have closing costs, but a seller could pay your closing costs. There are first-time homebuyer programs that help with closing costs and down payment. There's also 5% down is a standard conventional loan. There's first-time homebuyer programs with 3% down now. There's also FHA with 3.5% down. So again, it depends on the particular client, the home that you're looking at, the sales price of that home. But I think it's a bit of a misconception that you need to wait and save 5%. There's maybe multiple alternatives for you with less down payment.
That's very good. And so, with some sellers, another way that you could potentially use your tax return would be to take that money and do some renovations if you're thinking about selling, and then afterwards, talk to a loan officer about, funding to buy another home, or you could buy a second home.
Yeah, I'm sorry to interrupt. I hear so many people talk about, I'd like to sell my home, but I know I'm going to have to do this, this, and this in order to sell it. And that's not necessarily the case. Sometimes you can sell a home in a condition that may not appear to be perfect for you. Mm-hmm. Other times you can use something like the tax refund to do some repairs and kind of, whether it's curb appeal or just getting
Right.
that new appliance that you think is going to elevate the sales price. But I would speak to Dorothy first before you invest money in fixing up a house that you intend to sell, because you might be surprised that you don't need to do as much as you think.
Mm-hmm. And one of the other ways to utilize your tax return for those who want to age in place would be to make some renovations, I guess you would say, in terms of accessibility.
Yeah.
A ramp or other things like, reconfiguring the bathroom to help someone who's aging in place to make it more accessible to them as it relates to getting around the home.
Yeah, and I think just the general idea is let's put that tax refund to something useful. I mean,
Right.
The other thing that you might discover is that you could qualify for a home based on your income, but you're carrying too much debt.
Right.
So maybe we earmark that tax refund towards paying off that debt that's making it more difficult to qualify for the loan and the home that you want.
Right.
Yeah.
Yep. Well, everyone, thank you for watching my channel. And if you have any questions, if you're a buyer or a seller and you want representation in terms of your interest as it relates to buying or purchasing a home, you can contact me, Dorothy Menelas, at 301-639-2061 or Dorothy at theabrams.group. In regards to funding, you can also talk to Rob.
Yeah, and the best way, I check email all the time. It's rmercer, M-E-R-C-E-R, rmercer at firsthome.com. And my phone number at the office is 240-479-2302. Never too early to start playing with the numbers. Have your credit looked at, your cash for closing, and your income, and make sure that you're pre-qualified for the home that you like.
Thank you, Rob.
My great pleasure.
Yes. So if you like this video, please click on the thumbs up below and also subscribe to my channel to get any new notifications of videos. And also, thanks for watching. Till next time.